What up, people? Happy Saturday. Kamari Ellis here, the Finance Rebel. As always, here with your installation of Wealthy Conversations, which is our Saturday segment of the Finance Rebel Show. Basically, every week on Saturday at noon or noon-ish, if you're tuning in right now, we have a conversation about some aspect of wealth. And today, we're talking about earnings season. Had a lot of great stuff going on in the market today. Well, not today, this week, in terms of the earnings reports that came out. And many of you are probably like, what in the world is an earnings report? Well, an earnings report is basically a report card. It's a report card showing the financial developments and results for a publicly traded company. All right. And so this week, we had a whole lot on the board. We had Amazon, Clorox, Apple, who else? Chevron, IBM. There's a whole plethora. Comcast. There's a whole lot of companies that had great earnings reports. A couple that didn't have such great earnings reports, but it's a good way to really, if you're interested in stock, let me back up. If you're interested in stock, it's a great way to really dive into these companies, get a look under the hood, kick the tires, and see what's going on. And so I always get excited when it's earnings season. So not only was it earnings season this week, though, we had a lot of economic news come out this week also. Unemployment numbers were down. So that's a good thing from an economic standpoint, right? You got more people hiring, less people firing. So we had better numbers there. Matter of fact, let me just jump into the numbers, right? There were 553,000 unemployment claims. So that's lower than the overall 12-week averages, which is about 600,000. So roughly every week, there's 600,000 on average people that are filing unemployment claims. This week, on Thursday, they reported that there were only 553. So 553,000. And so, that's a good thing. Seeing more people getting back to work. A lot of people are out here are hyped up and excited about the vaccines. People are ready to go outside. The streets are calling their names and they're ready to go to the streets. So it's really going to be really interesting how we see the stock market shape up over these next coming days, weeks, months, and years. All right, so let's jump into it real quick because I'm not going to be on with y'all super duper long this week, right? It's tax season. I'm super duper backed up. Clients don't care that I'm backed up. They just like, listen, give me my stuff. Run me my paperwork and let's get on with this, whether they pay me or not. But that's a whole other conversation. All right, so listen, the S&P 500, the 500 largest companies, 500 largest publicly traded companies in the United States closed at 4,181, another all-time high. So the market overall is still continuing to power forward. It was down slightly a little bit this week, right? But the market overall, stock market overall, is up 11.32%. 11.32%. Oil was up $63.49. So a lot of us are still feeling it at the gas station, at the pump. I know I paid $2.99 the other day to fill up. I spent almost like $50 in gas the other day. Hurt my heart. I only wanted to go in there and spend $20, and to fill up, it was like $50. So that hurt my heart. That hit me harder than what I was expecting. But it's all good. So oil's up again 2% this week, and oil is still running up 31% year to date. Running 31% year to date. So anytime, again, we see oil go up, gas tends to go up. We are also approaching summertime drive when gasoline prices go up because they changed the fuel mixture of gasoline. So just be aware of that. Gold closed at $1,768, up about a half a point for the week, but gold's still down year to date. So gold's down year to date. So I know a lot of people love their gold. They think of it as a safe haven asset. They think of it as a hedge for inflation. And so, a lot of people have been running the gold, but we are seeing a big major reallocation or big movement of money to different asset classes. And we saw a lot of that this week. All right. But just keep going on. The economy has bounced back pre-COVID. Economy grew by 6.4% in the first quarter of this year. So we're getting back to things. Like I said earlier, vaccine juice is working. The vaccines are working, folks. Like I said, people want to get outside. People are ready to spend their money. Remember, roughly 70% of the U.S. economy is made up of personal consumption, personal spending. So people are ready to put their money to work. So that's going to be interesting. Now, another thing we saw was the Federal Reserve reported this week that they're not going to raise interest rates. They're not going to raise interest rates. They want to keep money cheap. They want to keep money very accessible, because usually what happens in low interest rates environments, people tend to borrow more. Banks tend to lend more. Now, the big banks have been really, really cautious. So they're not doing as much lending, but there's other programs that are going on where they're making sure the money gets out. And again, this $1.3 trillion plan that just came out, Biden's talking about tax cuts. There's a lot of things coming along. There's a lot of money out on the street. So expect the economy to continue to grow. That's my anticipation. All right. So Federal Reserve, like I said, holds rates flat. Now, another interesting thing, and I'm not talking about them this week per se, but Disneyland is opening. So Disneyland is the second largest theme park in the world. Only second to Disney World, which is in Florida. Disneyland is in California. And so that's telling you something. Again, these parks are starting to open up. I'm still not quite on the bandwagon of running to go outside because the streets are calling my name, because they are. But I still want to stay inside because we're still seeing COVID spikes. We're still seeing a lot of things. So I'm not quite there. And I hope we don't see a spike that could really slow things down. But if there's no spike and vaccines actually work, we're going to continue to see people spend money out in these streets. So it's going to be interesting. So a couple other things before I get into today's presentation, because what we're talking about today is some earnings, and I'm going to talk about earnings from Ford, Apple, Amazon, and who else is on my list today? Ford, Apple, Chevron's not on my list. Give me 1 second. I wrote my notes down, y'all, and I didn't print them out just yet. So Ford there is there, Apple's there, Kellogg is there, and there's one more or two more. So right, Ford, Apple, Amazon. That's what I want to talk about this week. Amazon, UPS, McDonald's, and McDonald's. That's it. Yep. Like I said, I can't stay on too long. I got to get back to work. The streets are calling my name, but so are my clients. So I got to be true to my clients first before I get to go outside. All right, but listen, Apple, Chevron, IBM, and Kellogg, and Raytheon all increased their dividends this week. What does that mean? What's a dividend? A dividend is when a company pays out a portion of their profits, usually, sometimes their money, to shareholders. So they pay that money back out to shareholders as an incentive for them in investing in their overall companies. Now, who decides when and where to pay a dividend? The board of directors decides. Board of directors can also say we're not going to pay a dividend either. But these companies decided to pay a dividend. Like I said, Apple, Chevron, IBM, and Kellogg, and Raytheon. Now, here's the thing. They increased their dividend. They're not just paying a dividend. They increased their dividend. So when a board decides to pay a dividend and increase their dividend, that means that they feel pretty confident about their future prospects for business. So that's another good sign. So I think the markets are going to be very, very interesting going forward. Very, very interesting. All right. So before I jump at everything, let me just say my hellos to everybody. Nomad Lift, how are you? Curtis Keys, how are you? Delphina Diva, how are you? Balance CPR Training, how are you? DLC 00021, how are you? Blackman L, hey. No Cap 55E, how are you? Gemini Poppy, what's up, Katie? Katie's in the building. Sophie Michelle, all right, is here. All right, welcome. All right, let's see who's checking in on the Instagrams. Oh, excuse me, I just checked it on Instagram. Who's checking in on the Facebooks? Hey, what's up, Jose? How you doing? We getting ready for our next round of these black stocks. D. Charles, yes. Facebook reported also. Yep. They had a big earnings report. Hey, Katisa, how are you? What's up, Mike? How you doing, man? So, and Miss Stuffmo, how are you? So, it's been quite an interesting week, y'all. Now, I want to say this note real quick, and I'll probably do a separate video for this later on. If you are a business owner and you're in the city of Philadelphia, because I know a lot of my folks are in Philly. If you are in Philadelphia and you do business in Philadelphia, I don't care if you sell water, if you got a hot dog stand, if you sell clothes, if you cut hair, if you do taxes, right? If you're a lawyer, please have a commercial activities license. And a business privilege account or a city account, right? Because when you do business in the city of Philadelphia, you have to report the business to the city of Philadelphia. If you do not report that, you can get in trouble, and big trouble. I talk about this a lot, but I want to start talking about it more because I had a client get jammed up because they are an independent contractor. They're a 1099 worker, as many folks like to say. But the thing is, even if you get a 1099, you still had to report it to the city of Philadelphia. Welcome to Philadelphia, folks. Now, I do my big share or my fair share of bashing the city, but I must say the city is starting to get it right, and they're working on doing better by small business owners. However, you still need to file, you still need to register. So let's not get caught up in any traps. Make sure you do that. All right. Okay. So Amazon reported this week, y'all. They made big money. All right. Big tech firm Amazon reported their quarterly earnings on Thursday. $26 billion in revenue or sales. I mean, they knocked it out the box. Now, I always find Amazon interesting because Amazon really doesn't play by anybody's rules. They play by their own rules. They usually don't manage their companies according to the street. They manage them according to what their own prospects and goals are and vision is for the future. They don't really care about what the street wants. And when I say the street, I'm talking about the analysts, right? Because earnings season, just to kind of give y'all some inside baseball, earnings season really is predicated and dictated by analysts from the big firms like the Morgan Stanleys, the JP Morgans, and some of the big major investment bank / investment research firms. Here's the problem. A lot of times, and this has been well documented, go back to Enron, go back to WorldCom. If you don't know about those scenarios or situations, rather, please go read up on them. What normally happens, or what has happened a lot, supposedly is not there anymore. You have an investment bank who does a lot of the investment banking for some of these bigger firms. They also do the coverage or the analysis of them as well. And so it presents a conflict of interest because it's in the investment bank's interest to give them a good report. It makes them sound better. They're more easily sellable to other investors, whether they be bank investors, high net worth investors, institutional investment investors, doesn't matter. It makes the story more sellable. Now, there's been some changes from the Enron and WorldCom days, but in the back of my mind, I still feel like, hey, these folks aren't trustworthy. So I really don't care about the analysts, but listen, the analysts drive media in terms of earnings season, right? Everybody's looking for them, keen on them, because the analysts supposedly, and oftentimes they do, they study the companies all the time. It's part of their overall assignment. It's part of their overall work responsibility. They study these companies all the time. They know them in and out. And so what happens is they'll give their predictions of a company and what a company is supposed to do in terms of earnings, in terms of sales, in terms of expenses, in terms of overall business expansion, and sometimes retraction, growth or falling, or growth or retraction rather, right? So, but they get it wrong. They're human beings too. And then so what will happen is you'll see investors buy on this news or sell on this news. Remember, the stock market is a product of economics, right? Supply and demand. And again, what drives supply and demand? Oftentimes fear and greed. So people see these reports from these analysts and they're like, hey, such and such analyst from JP Morgan said they're not going to do good, so I'm going to sell out. And they disappointed the street. So when you hear people say they disappointed the street, it means that the companies didn't meet up to the analysts' expectations. Now, you could have a company do $26 billion in quarterly revenue, right? And the street was anticipating $27 billion. They might report that as being a bad thing. They had a miss, is what they might often say. They still made a boatload of money. And then when you look at the profits, oftentimes, they're still good too. And so they're just saying that they missed their expectations. They missed their goal marks. Amazon, however, bringing it back to Amazon typically has ignored all of that. They usually don't care. Other companies are more easily are more easily swayed by this because they have to answer to shareholders and investor pressure. Jeff Bezos and company never really cared about it. Now he's stepping down at the end. I believe it's either this quarter or the next 6 months or either the year. I'm not sure. He's stepping down. He'll still be the chairperson or the chairman. So he's still running things, but he's not going to be the CEO that's involved in the day-to-day. So I'm guessing they will still carry that same ethos, that same philosophy when dealing with analysts, but they continue to make money because they know it's about the long term and not about just reacting knee-jerkly to short-term issuance and guidance and things like that. But again, Amazon killed it. 26 billion. It was really, really good. All right. Ford had 3 billion in income, net income. So y'all know I talk about Ford a lot because I own a little bit of Ford. Full disclosure, I own a little bit, just a smidgen. How did I get to owning my Ford? I dollar cost averaged into it, right? So as I always tell everybody, you don't need a whole lot of money to start investing. I started with like $5 with Ford. FYI, I remember I always tell y'all I have $2 of Apple. Well, I went ahead and took the big plunge, took the leap. I invested another $25 in Apple, but we'll come to that more when we talk about their earnings, right? But Ford, 3.3 billion net income. So the net income, that's what they keep in their pocket after everything's paid for. So Ford is back in the green. They're back to making money. I think they make more than that other popular so-called car company that's out there too. But their stock isn't as worth as much, but I don't know. But Ford warned that their earnings are probably going to take a hit because of the chip shortage that's going around, the global chip shortage that everybody is going to be impacted by or from cars and computers to shipping. Everything's going to be impacted by that. So keep that out. And there's still a lot of demand for cars. So Ford may not do another 3.3 billion in net income. However, they're probably going to get hit in this next upcoming quarter. So I wouldn't expect to see them do super duper good in second quarter earnings because they're already giving guidance for it up front. All right. So that's Ford. We got through Amazon. We got through Ford. UPS. Now, I like to talk about UPS because UPS and FedEx, I didn't cover FedEx, but UPS and FedEx are great indicators of what's going on in the overall economy. And many of the big companies are, right? But FedEx and UPS in particular show how well shipping traffic is. And if shipping traffic is high, then that means people are doing business, right? So it's a pretty big indicator of what's going on in the US economy and the world overall, right? So let me see. I'm trying to find what was UPS's numbers. I know their stock rose, and I don't have it. I missed that part, so give me 1 second. Give me 1 second. Oh, wow. So they did 4.6 billion. They did 4.6 billion and had operating profits of about 1 billion. So that's not bad. It's not bad. They're in the black. They're in the black. They are in the black. All right. So it says here a lot of small and mid-sized businesses drove gains in the U.S., outpacing larger customer growth rates for the third consecutive quarter. So 3 quarters in a row, they've been growing. And they are forcing on cutting costs. So that means they're cutting expenses. They're cutting the fat and size. So they're trying to run a tight ship. All right. So McDonald's, that's interesting. I don't have McDonald's numbers either. So give me 1 second, y'all. But McDonald's is still making money too. McDonald's is still making money as well. They did 5 billion, 5.12 billion. So they still had good outcome. They had this new chicken sandwich. I haven't had it yet. I don't see how anybody can get super excited over a McDonald's anything. But McDonald's is proof positive that you don't always have to have a great product or a service. It just needs to be good enough. And if it's good enough, it can make you rich, along with some good marketing and branding. So that's pretty interesting as well. Now I'm trying to find my Apple. I wanted to talk about Apple because I know they knocked it out the park as well. And they released earnings on Wednesday. And I know we talked about it a little bit on Wednesday's show. So we'll just go over it again real quick. Give me 1 second. Man, they killed it. Apple reported growth of 66% in iPhone sales, 70% for Macs, 79% for iPads, 25% for wearables. I wonder how much of that is fueled by them stimmy checks. But who knows? Stimmy checks and people getting back to work. So, I think it's good. I just hope folks are saving money in general. But if you are on an Apple, it's a good thing. Again, Warren Buffett has said that Apple is probably the best run company in the globe. So Apple I believe, will continue to make money. Will it? So here's the thing. There's oftentimes there is a disconnect between the company making money, meaning revenue and the profits, and what the stock price is. So you can look at a company like Tesla, who makes no money, but their stock price is through the roof, right? Apple actually makes real money and real profits. Their stock price isn't running as hard because it's not as sexy. It's been around a lot longer. All right, so Apple had first quarter revenues of 89.6 billion. Let's forget it. Let's round it up. They had 90 billion in revenue. $90 billion in revenue. Folks are buying. And I'm trying to see, right, and so they increased their cash dividend. And I was trying to see the overall profit. JT, my man. Thank you, sir. Hey, JT, I guess I'm officially your content researcher. So JT loves to do commentary on janky financial folks. Just as a quick aside, and some of them I enjoy more than others. JT probably gets it. I think he knows why at this point. I won't go into much of it, but I love JT's commentary. All right, so we got that. All right, so Jose said he's ready. Thank you, sir. Support Black content. We need more Black accountants to help build Black wealth. Yes, sir. Yes, sir. I totally agree. Here's the thing, and I know you already know this is already implied. We need more good Black accountants to fuel Black wealth. The Forbes, how are you? Welcome. Am I right, or are you talking about JT? Who are we talking about, the Forbes? Who's right? But yeah, appreciate that super chat, JT. Appreciate that. Guys and investors on IG. Kelly's Closet's on IG. Appreciate you. Dill Finding Diva, why are you laughing at me? All right, but Apple did. Where are we at? So I told you they did roughly 90 million in revenue. And I'm looking to see what the net profit is. Now, why do I always harp on sales and net profit? I harp on them because a company isn't a good company if they ain't not making no money. And again, a lot of people, a company that's not making any money, they may get some VC money, they may get some angel investors that kind of help them go along. But if a company is not profitable, they're not going to last the test of time. They're just not. They're not. All right, so Apple's net income is roughly $24 billion. So that's a good thing. That's a good thing. They're in the T Club, the $1 trillion club, so Apple's going to continue to do things, in my opinion. So, okay. So, all right, so the Forbes said I'm right. Okay, all right. Karan, how are you, sir? Happy Saturday to you all. So like I said, I'm not staying on too long, but listen. Oh, my McDonald's comments. All right, so the Dill Finding Diva laughed at my McDonald's comments. I guess you're talking about the McDonald's chicken sandwich, why anybody might be excited about it, but listen, it is. Oh, or maybe you're talking about not having stellar products. Listen, if it's just good enough, and I don't believe that actually, I believe we should all strive to have the greatest possible product or service we can deliver. Y'all know the adage, we all here, we all family, we Black, we know the deal. We don't have time to be mediocre. Now we may miss, we may make mistakes. We are all human beings, but we don't have time to be subpar. Be great. Let us be great, as Jay-Z said. All right. So listen, y'all, again, earnings season, great time to do some homework, catch up on stocks that you're interested in. I advise everybody to listen to an earnings call. If you want to get a crash course on money, listen to an earnings call. They're going over profits. They're going over expenses. They're going over what's on your balance sheet, right? How many assets do you have? How many liabilities or debts do you have? What's your net worth / what's your equity, right? They're talking about cash flow. For the record, my favorite income statement, my favorite financial statement is statement of cash flows. Cash flows is what really tells you what's going on with a business. However, that typically is super duper impactful at a bigger level, because when you look at a statement of cash flows, you'll see what's coming in just from their regular products and services that are being sold. What's coming in from maybe money that they lent? What's coming in from various investments they made? You know, it'll show everything that's coming in, as opposed to the income statement, right? Or your P&L that just shows revenue, right? Or sales or income that came in from the sale of your product or service, and what expenses that you sent out the door, right? That you had to pay for to keep your business running, to make it operational, to make it efficient. And then what's left over, your net profit or your net loss, right? So you could have either one. And I'm going to piggyback off of JT because I get a lot of these questions too. Listen, anytime you set up a business or you're thinking about setting up a business just to take a loss, it is tax evasion, or it can be classified as tax evasion. So let's stay clear of all that thinking, y'all. We don't need to be taking penitentiary chances at all. But again, like I said, I'm not going to be on too long, so I'm going to run. If any of you have any questions, feel free to text me at 215-974-0058. Again, 215-974-0058. And I will see you all next time. Have a great weekend, everybody. So long.